The morning report for the 5th of September 2011. Sometimes when you work as a stockbroker, it's like watching a slow-moving train wreck. We've picked a recession quite some time ago, talking probably 12, 18 months ago. We've picked up hard economic times were going to come 12 or 18 months ago as well. It's pretty all clear when you look at big major companies starting to restructure themselves after the close of the GFC at the end of 2009 and start focusing on the future. They're looking to reduce debt, they're looking to cut expenses, which generally means jobs. Now this was all very clear to us 12, 18 months ago, as I've said about 3 times so far, but it's now becoming clear to the media and so probably becoming very clear to the government as well. All the government knew this as well, and they're just spin doctoring for the last 12 or 18 months to make sure they look good in the eye of the public. Once again, we see in the US fears of a recession as the job figures were basically flat when people were expecting to see an increase. Now this isn't new news, and it's not new news here in Australia either. We will see the same thing. The things they're putting out in the job numbers wasn't so much concern about that they were flat, except for more people were now working casual part-time and more people doing less hours per week than they were doing probably 3, 4, 5 years ago. So this all points towards less money in the economy, less spending happening, more focus on paying down household debt, less gearing happening out there. Houses prices will go down. Interest rates will probably stay flat for now. They won't go down in the short term. Maybe in late 2012, you might see some drop in interest rates if the economy hasn't picked up. And this isn't new news. Like I said, it's like watching a slow-moving train wreck in the market right now. And what we're looking at again is the US was down over the weekend. Dow Jones down 2.2, S&P 500 2.5, and the Nasdaq 2.5 as the traders try to make a bit of money up and down on the marketplace. Our market was down 1.5% on Friday and probably fall about the same today. Now we're sitting around 4,234, which means the market will get back in the 4,100 range. 4,100 is where it bottomed out or started the fall last time, and I expect we'll see the market retest the lows that we saw last month, and it's another opportunity to be in there and buying. Now we're just marking our time. We do think the market will be weaker. We do think more poor economic news will be coming through. It's not a big surprise to us, and we're just waiting our time to pick up those shares at the right prices, getting the nice big yields. Keep in mind your big banks, your mining companies, your Woolworths, your Wesfarmers, Westfield, they've all done the right things. They reduced their debt, they're cutting staff, they're reducing their costs, and they certainly will be good, strong companies going forward. And for one investor, being myself, I'll be taking a bit of these on and holding for the long term to get the income. For any questions or queries, please give us a call or go to our website at growyourwealth.com.au.